I fucking love this trade, right? This is the trade that I favor over every other type of trade, and whenever it comes around, I'm always going to take this trade because the probability is so high, right? And it takes two things to happen, and I'm going to show you exactly what they are. This happened today at the Open, and it's always at the New York Open, and I'm always waiting for it, right, like a shark ready to snap on his prey. And so you can see here on the charts, market's not far from opening up, right? I'm on the 5-minute chart, but I'm trading on the 1 minute. But I just wanted to show you this thing here, so you can see I've marked out where I would perceive liquidity. Number one, right, you're going to have liquidity in this zone for sure, right? You can see a number of times we come down into this zone here, and you know, we've just kind of respected it. That's always a clue for where price is probably going to go, right? So that's one zone of liquidity. And then of course we have these wicks here, right? So liquidity zone there, and also at this very bottom, which would have been the low of the day. Now I don't know, and no one knows how far, if price is going to come down, how far it's going to come down. Is it going to come down to here? Is it going to come down to here? Is it even going to come down to there? Who knows? But one thing I will always do is be patient, because I would rather lose or miss out on a trade that didn't go my way, or did go my way but I missed out because I was too nervous to get in, versus getting in too early and feeling the pain of losing trade, right? So it's always that mindset that I will have to make sure I don't get buzzed out. Now I'm going to look for the reversal, and this is exactly what happens. These lines here, that's the VWAP, session VWAP, that's the second standard deviation, that's the second standard deviation, that's the third standard deviation, that's the third standard deviation. I talk a lot about standard deviations, it's exactly how I trade. But I need two things to happen. I need liquidity to be taken out, and I need to come as far towards the third standard deviation as possible, because my confidence really starts to dial in there. So let's see what happens, right? I'm going to go into the 1 minute. I've marked out the two liquidity zones that I think, because I think price is going to come down, and let's see how we go. There's the liquidity zones there. Right, let's hit play and let's walk it through. Should we do bar by bar? No, let's just go for a little minute, right? Just want to wait for the 230. Okay, coming in. Right, we're going to hit pause. First candle comes in right down to VWAP. Next candle, okay, bit of a slip up, back down again. You're always going to get that at your 230 open. Price starts coming down. We're being patient. You'll see when I take the trade, because it should come up on the chart. Next candle comes in, we're approaching, we've taken the liquidity that was underneath that first liquidity part. We're now moving down to that next liquidity line there that I'd already mapped in the head to think, right, where price is going to go and where am I going to reverse. Next candle comes in, bit of a wick to the upside, nothing wrong with that. Now this is the FOMO. Now you're thinking, damn, price hasn't come down, it's taken the liquidity here, but price hasn't reversed. Now it looks like it's going to start reversing. So do you panic and go, shall I rush into a trade, or do you stick with your conviction and say, no, I'm going to stay on the sidelines. If I missed a trade, I missed the trade. I'd rather feel that pain than feeling that I got in too early. Next candle, boom, right into the second standard deviation. I haven't quite taken the liquidity. Let's move the candle along. Whack, straight in. We've taken that liquidity there, and we've taken this liquidity, and now we're approaching the third standard deviation. Things are now starting to liven up for me, and now I'm getting ready to take a trade. Price hits a point there. Here, after we've taken this liquidity, I would absolutely start to be thinking to myself, now I'd be willing to take a trade. Boom, price moves up, and here we go. Absolutely fantastic. Price comes up right into the zone, probably going to hit VWAP, continue higher, and that's exactly what I'm waiting for. Those two things to happen. Number one, we take the liquidity, we pre-map those liquidity zones here, and then we're getting into this, because this is super exhaustion. When we start hitting that third standard deviation, we are so far out of balance from the VWAP, which is the volume weighted average price, the value, the true value, right, for the session, that when it comes close to that zone, that's a very, very high probability that you're going to get a reversal. This initial thing was just seeking liquidity all the way down before it reversed, and that essentially got me to pass. So if I just come out of replay mode, you can see here, when price comes down, That's where I entered there, where that little blue arrow is. And I got out here at the top. And that was about a $2,000 move. I need $3,000 to come in. When price comes back down, I get back in, get back out here. In fact, I added on there. And then these are just little snags because I was about $10, $15 short. Ended up passing the challenge and the rest is history. Could I have left this running? Absolutely, but it's a trail and drawdown. So you've got to be mindful with trail and drawdowns. You've got to know how to trade that system. But that is a trade that I would take a million times over. Take the liquidity here, took the liquidity there, we were patient, we got in right at the bottom there by the third standard deviation, and then price was obviously skipping up